What's up, guys? Welcome back to the channel. Today, I'm going to answer some questions that I've gotten about prop firms, how they work, how they make money, and what to look out for. So let's get started with today's video. All right, so below last week's video, I've gotten some questions from someone that has been following the channel for quite some time. Really appreciate that. But he was asking me about prop firms. And before I dive into the topic, I want to let you know that if you have any questions, just post them below, because here is the evidence. This guy asked me some questions, and right now I made this video about it to help him out. So if you want to see certain topics being covered, you have some questions, you're struggling with something, let me know and I might make a video about it so that you can move further and become a better trader. So let's start with the first question. How does a prop firm work and where does the money come from? Now, the real prop firms basically have a model where they have a pile of cash and they hire traders that are profitable and they divide the cash between those traders, so they have a bit of diversification, because let's say one trader is down, another trader might be up, and that way they profit from multiple traders, multiple strategy, and the goal is to make a return. You as a trader get a part of the return and the prop firm gets a part of the return. That's very basic how a prop firm works. The money usually comes just from the firm itself. They have a pile of money. But nowadays, there are these online prop firms. I mean, you all know what I'm talking about. You have FCMO, you have, I don't know, Funding Talent. I don't know what these companies all are. And most of them work differently. They profit from failed traders. And the way they do that is that you have to pay for a challenge or for a phase where they track your performance to see if you're profitable. So you have to pay a certain amount of money and you have to follow rules. And if you don't follow the rules, you lose the money and they get the money. And they use that money to basically pay out people that are actually profitable. And these people are only very, very few. I'd say I believe around 80% fails the challenge. And when people actually get through the challenge and get funded, they don't get live capital in most instances. Even if it says it's a live account, usually it's a false live account and you're only trading your own money. So there's really something to think about. So most of the times, people that are profitable with a firm get paid from people that weren't profitable and paid a subscription fee for the challenge. That's usually how these firms work. And they do this very, very intelligently. And that way they can profit from failed traders, because we know that most traders fail, and even the people that pass the challenge, generally speaking, within 1 or 2 months, they're gone because they break a rule and they pass the challenge because they were lucky. There isn't any consistency, so they fail, and a prop firm profits from it. At least the prop firms you see nowadays, most of them. I know there are a few legit ones out there. I'm not going to call any names or anything, but do your own research. And so this is how a prop firm works nowadays. They get subscription from challenges. When people fail, they lose the money and the firm gets the money. They use a part of that to pay out people that are successful, and the rest is for themselves. So yeah, that's basically also answering the second question. If I go to the third one, real and fake prop firms, there are prop firms out there that are real and fake ones, and you basically want to look out for payout proofs. Is there proof of payout? Are there bad reviews? Are there good reviews? Study the prop firm and look at how they work. Where does the capital come from? Can you ask questions? Do you get answered well? Do they know what they're talking about? Those type of things. Just use your common sense, and if something seems too good to be true, or There isn't really a team that shows themselves on social media. It's just someone probably hiding in a basement and trying to scam you. Then really look out for that. So be aware, prop firms do offer a great opportunity, but you really need to find the best ones. Now comes a great question: how to make money with prop firms? And to me, prop firms are a great way to increase your capital if you are consistent. Don't sign up if you're not consistent in your own account. Don't sign up if you haven't been profitable yet, because it's only wasting your money. So with these prop firms, you want to search for a firm that basically fits with your trading style. So let's say you're a swing trader like I am, then you need to find a prop firm that allows you months of trading, not just 30 trading days, 6 months, a year. Look for rules that allow you to hold over the weekend. Basically find a firm that fits with your trading style, because that increases the chances of you actually passing a challenge and getting funded. So with these firms, the way I approach it is that if you get funded with a firm, you should be aiming to just be consistent, make money, and the money you make from the firm, build it up and put it in your own account. Because in trading, you don't want to have to rely on a firm, and a trading firm can go under any single time. That's really something to think about. And if you've only been trading for the firm and compounding and never take money out to build your own account, you might end up with nothing. So let's say you make 3K a month prop trading, withdraw it, put it in a basket, fund your own account, make a bigger account. And then maybe when you have 50, 100K in an account, then you can slowly transition to only trading for your own account, or maybe combine both so you get the best of both worlds. So a prop firm, in my opinion, is useful to get capital to fund your own account and to then be 100% independent. Because if you trade for a firm, you're not 100% independent. You need to follow certain rules. You need to stick to the guidelines. There are certain rules about inactivity. There are certain rules about consistency. And those things can really harm your performance. They can limit your trading. But if you trade your own account, you make the rules. And for some people that's good, for some people that's bad, but you get the point. So that's my take on prop firms, how you can use them to basically scale up your own capital and then trade for your own capital and for the firm to get the best of both worlds. So watch out for real and fake prop firms. Do your research. Most of the online firms out there make money because they have losing traders instead of winning traders. They profit from the subscription fees that people pay for a challenge or something like that. I don't care how a prop firm gets the money. As long as I get paid, I'm totally fine. I know most people fail, and I don't think it's a wrong thing to profit from those people. It's a smart idea. It's a smart business model. As long as I get paid, I don't care if it comes from challenges people fail or it comes from a genuine pot of money that the prop firm has. So hope this answered your question. If not, let me know in the comments. If anyone else has any questions about certain topics, let me know down below, because I'm here to help out, guys. I'm different. I like to interact with you guys. That's why I focus on personal attention. So don't be scared. Even if it's a weird question, I don't care. As long as it's trading related, that would be fine. And I will try to help you out. So thanks for watching, and see you in the next video.